Hey investors, Marcia here from Bookworm Investment Club. Normally about this time, it's Saturday and it is August the 17th. I'm sitting down and I'm writing the Sunday stock nugget for my people on my email list. But I decided to do something a little different this time and to do a video rather than to write all this information down. So here goes. There's been a lot of talk this past week about the upcoming recession and the inverted yield curve. And I'm still doing some research on that because, to be quite honest, it kind of something that I didn't know about. And so I'm looking to find out more information about that. But basically what is being said is that anytime we have an inverted yield curve in the bond market, it is usually that precedes a recession. And that has happened in the last 50 years. Anytime we've had a recession in the last 50 years, first we've had an inversion in the yield curve, and then that is followed by a recession within a 2-year period of time. So it's a pattern. And personally, I pay attention to patterns. And so my thought is that if I'm seeing an inverted yield curve, then there is a strong possibility that within 2 years, we may be in a recession. And so I need to, as an investor, position myself so that the portfolios that I have established, my stock portfolios, would experience a minimal loss during this recession. So as an investor, I'm making a plan. And as an investor, you should make a plan too. Now, you may decide, I don't want to be in this recession. I don't want to have a portfolio in this recession, so I'm going to eliminate my portfolio and just go into all cash. That's fine. That's your plan. But as an investor, I am going to be looking at the sectors, and there are 11 economic sectors that will better position me to have my portfolios have a decrease or a minimal loss. And so I'm looking at companies that are in 3 specific sectors. One, the utility sectors, and that's the companies that are the gas companies, the electricity companies, water companies. I'm looking at the consumer staples sector, which includes companies that make services or products that we need to survive, like food, drink, hygiene products like toothbrushes, toothpaste. So I'm looking at companies in that particular sector. And the other sector that I'm finding extremely interesting are REITs, which are real estate investment trust. Now, sometimes if we want to be invest in real estate and not want to be a landlord, we can look at this particular sector. And REITs own and operate various real estates. And the nice thing about REITs is, even though all of the income that they make, 90% of that income or profit that they make has got to be given out to the stockholders. And so when we talk about REITs, we're talking about property like these storage companies, self-storage companies, apartment buildings, warehouses, And so it's a very interesting sector. And the commonality behind all of these sectors, the utility sectors, the consumer staples, and the REITs, is that they offer dividends to their shareholders or their stockholders. And so personally, that's my plan, because I will continue to invest. I will continue to build my portfolio, but now I'm shifting to look at companies within those three sectors. In fact, I wanted to remind you that we are having our master courses this coming Thursday and Friday, where we talk about how to pick a broker for your stock portfolio and how to pick stocks to go into your stock portfolio. I think that on Friday we'll kind of look at stocks that may be in these particular sectors also. So I invite you to come to the master course. You can sign up for the master course on the website on www.bookworminvestmentclub.com. So that, my friends, is your Sunday nugget, and you should be getting this in your email tomorrow morning. In the meantime, have a great rest of the Saturday evening, and we will talk soon. Thanks.